the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
Is now a good time to buy crypto bundles? The crypto market is down more than 20% in the last month, part of a broad sell-off in global markets. That's a consequence of the US government shutdown, profit-taking, and markets sensing further cuts in interest rates. A lot of weak holders in Bitcoin, Ethereum, and other cryptos have been shaken out of the market. So, I repeat the question, is now a good time to buy? Just this week, South Africa's largest crypto exchange by volume, Valor, announced the launch of its own crypto bundles. These are the crypto equivalent of a unit trust, where rather than buy one crypto, you get exposure to many. These bundles are managed and then rebalanced each month. To explain this, we're joined now by Blake Player, Valor's Chief Commercial Officer. Hi, Blake. It's good to talk to you again. Thanks for coming on. Crypto bundles aren't new. You also have Altify and Easy Equities as two of the better-known providers of crypto bundles. So what made Valor decide to enter the market now?
Hi, Kieran. Yeah, good to be back with you again. Indeed, this is not the first time that the market is seeing a product like this. It is the first time from us, though. And, we have a large number of clients that have, I would say, trouble in deciding exactly which digital assets or crypto assets they'd like to buy. And a lot of the desire is just to get exposure to the overall market performance within this asset class. So this is in response to that need. Previously, our customers have been able to assemble these products effectively themselves and purchase these assets and rebalance them themselves. But this is a way to make that even easier, where we have an automatically rebalancing portfolio of assets that they can get exposure to in a single unit. So our desire here is to not only just do this specific top 10 bundle, but also to create a platform and the capability for us to assemble a whole range of interesting bundles, ranging from not only a top 10 or market cap weighting, but also into interesting sector focused ones, or have ones with completely different strategies that might include non-crypto specific assets, that might include some components like stocks or gold or other bits of digital assets that could help to diversify portfolios beyond just within the crypto asset class.
Right, maybe just explain. So you've launched one. It's called Valor 10. That's the name of the bundle. That's invested in the top 10 cryptos by market cap. Now, those market caps are changing all the time, and this is why you've got to rebalance. So you've kind of set, let's say Bitcoin at the moment would be probably a little bit north of 50% of the total crypto market. Next month, it might be 45, maybe unlikely, but so you would have to rebalance. So just explain how it works, and also how your bundles are different from others already in the market.
Sure. So we have I would say, a fairly straightforward methodology, which is that we try to match or track the performance of an index of the top 10 market cap assets. We do apply certain caps to market cap in terms of its overall contribution to the portfolio. So, for example, as of November, Bitcoin is at 40%, even though its overall percentage of market cap is higher than 40%. We do this to prevent any single asset from having an outsized influence on the overall portfolio, and to actually result in some diversification away from the largest asset. So we do implement some caps. There's also certain assets that we may not include. For example, we don't add the stable coins in, even though by market cap they have a very large market cap. They don't, they're not added to the portfolio. So there's a number of, also there may be some constraints about our ability to custody certain assets, so that may exclude them. So we have a methodology which you can find on our website. And, that is the basis of it. We rebalance this once a month. Any more frequently, and your trading fees tend to eat into the returns of the bundle. And overall, we try to keep the bundle as efficient from a fee perspective, while still maintaining a close index tracking methodology. The way we've done this is very similar to how you might see other index tracking products in the traditional market. So we've tried to keep the methodology very similar, as well as distribute it in a way that allows not only our retail clients, but also our business clients and other fintechs who are distributing crypto assets to also get hold of this product and use it within their offerings to their clients. So this is the first of many types of bundles that we'll launch.
Okay, and I presume when you say it includes the top 10, so that would be things like Bitcoin, Ethereum, Solana, Tron, but you've excluded.
Yes, BNB Coin, Doge, Chainlink, a few others, yes. We do keep a small cash component of the fund for fees.
Okay, yeah. Give us an idea then of the costs of investing, because there's been a lot of discussion about that in the crypto community, whether the bundles are actually worth it.
Yeah, so I think this is the trade-off you make when you access any financial product. Obviously, there's a cost of producing these products and maintaining them, and Vela does take a fee like any other manager. So we take an annual management fee of 2%, and all these costs are on the fact sheet, which you can download on the website. And then your cost to access the fund is the same as any other asset you would trade on Vela. So there's a method you would go into your simple buy, and you get charged the simple buy fees that are applicable to your accounts. And those fees are published on our website as well. So you have both a purchase fee or a sale fee, as well as the annual management fee, which we take. And we disclose all these fees upfront on our website, as well as the fact sheet for the fund and the bundle. So you'll be able to learn more about the exact constituents, the fund's performance over time, and how the bundle's been doing, and what other disclosures we may need to make.
Are you pitching this mainly at people who are fairly new to the crypto market? They maybe don't understand, do I go for Bitcoin or do I go for Ethereum? So therefore, you've given them an option where they can actually get the top 10 cryptos. Or is this something for more seasoned players as well?
Inherently, it does have a higher degree of risk than just Bitcoin, because on average, your other altcoins, as they say, are more volatile than Bitcoin. So it is expected to be slightly more volatile. That being said, it's hopefully also diversified in that if any single asset has a bad performance, that others may make up for it, and likewise. So there is some risk in that it might, there might be some assets that are very badly performing, but there might also be some that are very, very strongly performing, and it just depends on the market climate. So, for example, we see that actually for the bundle, there could be in a bull market massive outperformance, but likewise in a bear market there might be lower performance, because altcoins tend on average to underperform Bitcoin in bear cycles. So I think this is a product for people that want to get access to the overall crypto asset class, as opposed to Bitcoin specific returns, which are very similar to overall market returns, but are not exactly the same. They don't have generally the upside of new projects and new technologies that are being developed all the time, whereas this bundle allows you to passively get exposure to up-and-coming projects and crypto assets.
Right, so let's go back to the original question. Is now a good time to invest in cryptos? I mean, the market is down 20% in the last month. A lot of the weak holders of crypto have been shaken out. Can the market go lower? Who knows? But what do you say? Is this a fairly good time to go in? And how does one go about investing in this? Do you recommend people putting in, a regular amount every month, what they call dollar cost averaging, or every week, or lump sums, or how do they go about it?
Yeah, so I can't give any specific investment advice to the audience, but I can say that obviously Bitcoin is particularly cheap at the moment relative to a month ago. And likewise, most of the altcoins are also have sold off heavily. So if you have a longer term view on the markets, now is the time to consider whether the market has bottomed or not. I don't think anybody really knows. There is certainly a bearish sentiment at the moment. And, that is sometimes indicative of a period where it is helpful to start averaging in or to start looking at entries. But of course, the market could continue to go lower as the news cycle develops and as more information unfolds about what's going on in the US with the shutdown, with the trade relations in China, with interest rates. There's a lot of uncertainty. So it's difficult to say if it's a good time to buy, but it's certainly better than it was when it was more expensive.
All right. Now, you've also just announced a partnership with Mukuru to promote stablecoin savings in Africa. I attended the Africa Stablecoin Summit, as did you, last week. And one of the concerns raised by regulators there was the potential for dollarization of African economies. Places like Nigeria and Malawi, where they have very volatile and weak local currencies, people can switch into dollars via stablecoins. So Mukuru is interesting because it's got 17 million customers, many of them in these countries in Africa with weak domestic currencies. So now their customers can save in a US dollar-backed stablecoin. And the stablecoin you've chosen is USDC, which is the second largest. And I think that's got a market cap of about $75 billion. This is potentially massive, I would imagine, for both of you, both Vala and Mukuru. So tell us about that.
Yeah, thanks, Kieran. It's very exciting for us. We've been working with the Mukuru team for a few years actually on this. So there's been a lot of discussions, a lot of work that's gone into making this possible. And for us, it's about how do we give access to a customer segment that is quite difficult to serve profitably for many institutions, access to higher quality financial products and means to save in a way that supports their cost base. So many of these clients of Mukuru are sending dollars back to their families every month. Let's take the example of a Zimbabwean family who might have somebody working in South Africa. That is likely to be a client of Mukuru who is sending some portion of their income back to home. But home, they need dollars to spend. And for that person, it's very difficult for them to get access to a US dollar related savings product in their range of financial service providers. But by using much cheaper technology and more efficient technology, we're able to, through WhatsApp interface, literally without any mobile apps other than WhatsApp, you can purchase USDC through our partnership with Mukuru in your Mukuru account. And you can start to save in US dollars that you might then need to send at the end of the month or the end of the year back to your family at home. And we're able to do this at a fraction of the cost to what you might go and get if you had to go to a money changer or a traditional bank in trying to access these products. Importantly, we are not allowing for direct dollar purchase here. This is a crypto asset. It's a financial product. It's very similar to how folks might be able to go and buy Bitcoin. So this is a means for them to get exposure to US dollars at this point, but it's not actually the same as a bank-held US dollar. There is some nuances to that. That being said, it still serves a purpose for these folks. And our plan is to bring even more quality financial products to this customer segment through this plumbing that we've established with the likes of Mukuru.
Right. I mean, could you foresee a time in the future when Mukuru's 17 million customers would be able to buy Bitcoin via WhatsApp?
That'll be for them to decide, but I can certainly see a possibility where that does happen, as well as many other financial products that are helpful for a customer segment that is sorely underserved.
And so you say you can buy it through WhatsApp. Just explain that.
Correct.
I mean, that sounds maybe a little bit insecure, but I'm sure you thought all of this through. So explain that. So
Mukuru actually services a lot of their customers through a WhatsApp UI. So they use the WhatsApp for Business functionality, and they have a text-driven menu. This is very similar to how a lot of services were previously sold through USSD. So if you ever tried to top up your airtime, you might have dialed *101# and then gone through that sort of text-driven user interface. This is basically the same sort of concept, but just driven through the internet rails as opposed to the GSM rails of the telcos. So in this case, you would get a menu, you would select the invest in US dollar stablecoin option, and then you would get the option to buy, sell, or view your balances. And you would top up your account the same way that you top up for any other Mukuru transaction through a cash at a retailer, and many other funding methods that they are rolling out soon. And then you would be able to instruct balances. You're also given a secure PIN, which means that only after entering that PIN through the WhatsApp secure interface, you would be able to conduct any transactions. So it's simply just using a different way of interfacing with Mukuru. And the idea is that also this would be rolled out through their other channels like their app and their card product soon.
Right. And again, the question of costs comes in because remittances in Africa are expensive. The World Bank, they put the average cost of remittances at just shy of 7%. It depends what country, what amount, and all that kind of thing. But so what kind of costs are we talking about here?
So this product is available from Mukuru at a 1.2% fee. So for 1.2%, which is a fraction of the cost, as I said, of obtaining dollars that in the alternative form, you're able to save in a US dollar product. And you don't have to sell it, and there's no ongoing monthly cost to holding that balance, which is very different to most banking facilities that would allow you to save in dollars. There would almost certainly be a $1 charge for that for per month. We don't charge anything. Mukuru and Valor combined, there's a 1.2 cost for purchasing USDC or selling it.
It does occur to me that Valor is beginning to look more and more like a kind of new frontier financial services company. You have you can buy X stocks, for example. You can buy Tesla, or the crypto equivalent of a Tesla. You have a dollar yielding private debt investment that you've got a lot of different products that you've launched just in the last few months, and now you've got this with the crypto bundle and this deal with Mukuru, getting more and more like a traditional financial services house. Would you say?
Yeah, I think that's expected, right? We are a fully licensed financial services business across multiple categories. We have an over-the-counter derivatives provider license. So we are operating in this space, and crypto assets are a financial product. So I think it's natural that we would start to leverage this licensing that we've worked hard to acquire and spend a lot of effort and money to maintain and stay compliant to distribute more products. A big part of what we're trying to do is re-platform a lot of financial services onto new and better rails. And we believe those rails are blockchain orientated. And the more products that we can put on chain and distribute them in a more efficient and modern way, the better we think we can serve humanity and our customers by providing these products at lower costs with higher liquidity and with 24/7 availability, which is unusual in the traditional space. But now that these two worlds are blending, the secondary market liquidity, the ease of distribution, and the global and 24/7 nature of this technology allows for what were once maybe quite inefficient or clunky products to be served in a really, really interesting and efficient way to customer segments that previously had no access to this.
Very interesting, and we look forward to seeing how this goes in the future. We're going to leave it there. That was Blake Player, Valor's Chief Commercial Officer. Thanks very much for your time, Blake.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.